Good morning, traders. Good afternoon, traders. Welcome back to another Sunday video. Thank you for being here. In these videos, what I do is I take a look at the markets for the week ahead, and I talk about trading setups that I am looking at myself or trades that I'm already in myself. I wanted to just take a quick moment to start out. This weekend, we did something really cool. This weekend, this is my Twitter, by the way, and if you don't follow me, hit me up on Twitter at TraderNickFX. We had a in-person seminar, and this is my team, and they did an incredible job. And I just wanted to shout out and thank some of you guys who are probably watching this video who came to the event yesterday. It was a huge success. We met a lot of great people, made a lot of connections, shook a lot of hands, had a lot of great conversations about trading. It was a blast, and I can't wait to do more of them. I'm not sure exactly where we're going next, but I hope to have another one coming soon. So yes, shout out to Owanda and shout out to my own team for doing such a great job putting on that event. And thank you to everyone who made it out yesterday. It was really, really fun. So yeah, it's still fresh in my mind. Guys, if you're, for those of you who did come to the event, I went to bed afterwards at about 6:30 p.m. because we did it early in the morning all the way through, the middle of the day. I went to bed at 6 p.m. I woke up briefly at like 11 p.m. and then I went back to sleep until, about the time I'm making this video. So 7:30. So, I mean, it was an exhausting but incredible experience. So really fun. I can't wait to do the next one. Anyways, jumping into the markets for this week, I wanted to talk about the dollar first. So the dollar was, it struggled last week. In fact, it actually tried to make a break for new highs. It tried to break out of this structure, but I wanted to point out the fact that if you're talking the summation of what happened last week, it was some economic numbers that were really strong. We had PMI numbers come out. This is a 4-hour chart, by the way. PMI numbers came out, and they were hotter than expected, and the market rallied on that. But the rally was short-lived. It never was even able to break through the highs. And to me, in terms of a price action standpoint, this shows some weakness on the dollar's part. If you've been watching the channel, you know I'm pretty bearish on the dollar, partially showcased through my bullishness on the gold market. Though the gold market also had a tough Friday. Part of the reason for that was we had during this dip, this was interesting because we had PMI numbers for the UK and Europe over here, and they came out stronger than expected. Then we had PMI numbers for the US right here. They came out stronger than expected. This makes a lot of sense if you think about why gold tends to rally during fear times. When the markets and the economies out there are scared or looking ugly, we tend to see gold catch a little bit of a bid. But when we have the opposite effect, stronger than expected services and manufacturing PMI numbers coming out, it caused gold to really tank, right? So it was an interesting end to the week because gold gave back a lot of its grounds, dipping back underneath that 2,000 mark. And I had been bullish, looking for a breakout above the 2010s. Didn't get it, so I was never entered into any trades. But I'll continue to watch this because, yes, we did have some good economic numbers. But I think, inflation is still very hot overall, still has a long way to go back down to get to normal, quote-unquote, levels. So what I'm looking for on gold is I'm still looking for rallies, but I would like to see sort of price action return to a bullish state. And preferably, I would love to see that breakout around that 2010 get breaking out. So if you're watching gold with me this week, what I'm looking at on the higher time frames, looking at like the 4-hour chart, this is sort of my zone of focus. I'm looking for this 2010 level to break back above, hold above, and then I'm looking for pullbacks. And, in terms of targets where I think things could go with this gold move, I still am targeting in the short term a move back up to 2050, and in the bigger picture, a move back to the all-time highs and perhaps above them this year at 2070s. We'll see if I'm correct about that. I've been wrong before, and I'll be wrong again. But in this case, I think that there's a good shot that the gold market has a bigger move to the upside coming. How soon will that be? Well, we'll have to be patient and watch for signs. Again, I'm looking for breakouts to the upside going into this week. And perhaps just in the next couple weeks. So we'll watch out for that. Gold also was on the list here. I don't know if it has a bullish reading at this time. I think it just fell off the list. But usually what happens is that the EdgeFinder, for those of you who are familiar with the scoring of it, you know that the trend reading, for example, when the market starts to trend back up, we usually tend to see the trend reading go more positive. And also as a trend persists to the upside, usually we see retail starting to short that trend. If the market's going to the downside, retail traders tend to go long. If the market starts trending to the upside, retail traders tend to go short. It's a very observable recurring pattern that we notice. Anyways, that's my thoughts on gold. I'm waiting to see if we can see signs of breakouts to the upside, but also confirmation from the EdgeFinder, which does not show gold currently. Speaking of a market that gold that is on the list, we have a couple of yen crosses still up here. We've got euro yen, pound yen, dollar yen. If we take a look at this pound yen example, for example, we talked a lot about the pound yen the week before this past week, where I was long on this run up. I actually caught from around here, ran all the way up, and then was exited out on some trailing stops here. Missed a little bit of the rally, but that's okay because it did end up coming back here. Found a lot of support here. For those of you watching GJ here going into this week, this one looks resilient. It looks like it wants to continue back up to the previous highs. And for those of you who are breakout traders, let's see if we can actually get a break above 168 this week. This would be interesting. If we got a return back to the highs, that would be one thing. But more interesting to me would be sort of that breakout point. Can we actually get the break above, retests, continuations kind of concept? That would probably be my most interested scenario on pound yen. Again, getting a +5. Why is this so bullish? Well, let's go take a look at it just to showcase why that is. And in a second, we'll take a look at COT data, which might be interesting to a lot of you guys who pay attention to that. In terms of COT data, the yen is still very short by institutional traders, 82%. 67% in terms of retail sentiment are short. We use this as a contrarian indicator. For those of you who use the software, you know, GJ, if 67% of retail traders are short, that is a bias to be long in the minority. It's the inverse effect when we talk about smart money. I generally tend to follow along with what smart money is doing and go against what retail traders are doing, if that makes sense. And that's why we also have it reflected in the score. So right now, the yen, very short biased, right? This is showing in this view, preference for the pound, less preference for the yen, or even negative preference, right? So in this case, buying the pound, selling the yen is sort of the preferred trade in my view. And so that's why we have it scored that way. Retail sentiment, the opposite. The crowd is short, so we want to be long. So this is how we build up a score overall on a particular asset. So when we look at GJ, like I said, this chart looks good. I'd like a breakout to sort of be looking for the technical entries and exits, but I like the trade itself to the long side based on the fundamental factors. By the way, guys, this is actually our last chance to get access to the EdgeFinder for our once a year sale that we're doing. So a little bit of a context for this. My company A1 Trading, which put on our seminar this weekend, we build software tools. And if you're interested in getting the EdgeFinder, if you've been watching my channel for a while and you'd like to get a copy of our tool, we are doing our the 1 year celebration sale, and this is ending very, very soon. With the sale, you get access to our COT data, our retail sentiment indicator, bank signals, the watch list, the signals for 30 plus assets and pairs, and we do one-time payments. So it's not a monthly subscription you have to pay or anything like that. You get access to the software one time, you pay for it, and you're on the list, and you get access to it whenever you would like. So if you don't already have it, grab your access today. Use that code that is in the description down below. Click that link. It'll take you to where you can find information, and you can get a massive discount on the product. So again, it is 40% off, and that is ending. You will not get that price again for the foreseeable future. So do not miss the sale while it's there. Back to the watch list for a second. There's a couple other assets I wanted to look at. I've got to take a look at my S&P idea. I am currently long S&P500. And this past week was sort of a choppy one. We didn't really go a whole lot of either direction. Part of this could be chalked up to earnings being mixed, right? You had it started out hot, and then some of the more recent earnings were a little bit more disappointing, showing some signs of economic slowdown, that sort of thing. But, with PMI numbers still showing some resiliency there, the market was all over the place this past week. I'm still long. My cue to get out of a long position would be a breakthrough market structure. And what I'll do is I'll actually show you guys my my Webull account. So whenever I talk trades, I try and stay as transparent as I possibly can on the internet. So what I'm going to do here is I'm just going to pull up my trades, and we're going to go into this custom here, and I'll show you guys in terms of my SPY trade that I have on. We'll pull this up. There we go. So it is about break even. So let me get on the 4-hour chart. So this is my the chart market. So I do my indices and commodities trading directly on Webull. This is just where I've done it for a long time. So I am currently looking to hold on to this position unless it breaks through market support. If it breaks through the support level, I'm going to take my stop there. So again, that's kind of what I'm looking out for the S&P trade that I'm in. And I called this one out in the group, so we're still many traders who are also long biased, also watching this, are keeping an eye on that going into this week as well. So, you know, if you guys are not already in the Discord, by the way, you can get that access down below in the description. We have a free Discord as well as a paid one. The paid one will get you access to see all the trades that I'm taking. So if you want full breakdowns, analysis, everything about what we're doing, find it there down below in the description. Also, major discount on that for the current time that is ending soon. It is our biggest sale of the year. Code is down below in the description. So I know I keep saying that, but the point is I don't want you guys to miss the sale, because every time we do something like this, we get people afterwards who are like, hey, I missed it. Can I still get that? And we'll be like, sorry, like, you know, out of respect for the people who did get access, we have to, you know, stay true to our idea there. Anyways, let's talk about the euro. The euro had strong numbers, PMI numbers as well, caused the euro to spike up. When the dollar reported, or when the US reported their PMI numbers, it shot the euro back down with dollar strength coming in. But the euro was very resilient. It shot back up and held. And I actually think that if you get a strong break here, the euro looks very poised to make a bigger move back up to the 1.10s, which we briefly were trading in. We rejected very hard up there, but I think the market may want to do sort of a zone to zone here. And I've talked about this for a while. If we get a nice green candle breaking through this high, we've been stuck in a range for several days. This is a 4-hour chart. So you can imagine, this is some time has passed, pretty much most of last week. If we get a candle that ends up looking like this, like you get a nice green solid candle breaking through the highs, any sort of attempt to retest, in my view, looks pretty bullish for the euro. Now, there are some conflicting factors here. When it comes to the euro, the EdgeFinder, I don't believe has much of a bullish bias at all. Let me actually pull that up so we can confirm. So, yeah, we have a pretty neutral chart here. Retail is short. That is a bullish indicator. But then, in terms of COT data, we don't really get much of a confirmation here. In fact, we need to go next and take a look at COT. That's on the definite thing to do here. You can see that both the dollar and the euro have high long interest from institutional traders. So this kind of cancels out and gives us a 0 score. That's how that works. Then you take a look at economic numbers. Well, GDP growth is better in the U.S. Inflation is better in the U.S. Unemployment is better in the U.S. And interest rates are more attractive in the U.S. for foreign investments, that sort of thing, which, again, can draw strength to the currency. So the dollar is not necessarily something I want to just absolutely go short on against the euro. However, there's another one that I really like, which I've been watching for the last few weeks. And let's see if we got a pullback on it. It is Euro Yen. So Euro Yen, much more clear picture here for me for what I like to trade. The euro looks really good on COT and the yen looks very weak. Meanwhile, the retail traders are piled into a short trade on this, which is, again, another positive factor for me when looking for possible long setups. So when we go over to Euro Yen, we might have missed the move here, but the idea is still the same. We had a beautiful uptrend going here, and if I'm going to trade the euro, it's going to be against the yen for the time being. We had this level hold. I'd missed this trade. I wasn't in this trade. One thing to pay attention to, though, forward looking, would be if we got some sort of break and retest here. So if we get a nice sweep through the highs here this week, pullbacks into support look really good for continuations, in my opinion. And if you're familiar with my style of trading, I'm looking to trail stops. So like, let's say that we did get this momentum breakout, stops kind of in place, looking for continuations. I like to trail stops. So for example, if let's say we get entered into this trade and it starts breaking through the highs, I'm going to start rolling that stop loss behind any higher lows, that sort of thing, and just rolling into profits, whatever I can. That's generally how I trade. That's a very quick overview of how I trade. I have videos on that. If that's something you're interested, just look up Trader Nick trailing stops on YouTube, and you'll be able to find out all sorts of information. Now, I kept saying I'm going to do it, so let's make sure I do this. Let's go take a look at the smart money tracker here for the day. So we just had updated COT data come in, and it's very interesting to take a look at that each week. So it shows still a strong preference for gold, very, very long biased on gold, 78.75%. The euro, actually, let's make sure, is this the most updated date? Yes, it is. Okay, so we just refreshed it. Yen still very weak. CAD still very weak. Wow, very interesting. Let's see what the change is looking like. So gold, guys, had a latest long change. So these are the number of futures contracts open long, and here's the ones short. But a slight increase in short positions this past week, with net longs not changing much at all. Little bit of interesting stuff there. Gold still heavily preferred long by institutional traders, but again, shorts being picked up. I'd also like to take a look again. I'm going to be selfish here. I'm paying attention to the S&P. What are things like here? Ooh, this is interesting. Institutional money picking up bigger short positions. This kind of goes against my positioning on the S&P, though I'm already sort of against the rye here when it comes to institutional traders. I'm long S&P, whereas institutional traders are against me on that. There are times where I do that. I'm not 100% all the time just following exactly what's happening here. But yeah, so anyways, NASDAQ paints a different picture though. This is tech stocks, right? And tech stocks, generally the higher risk list of here, right, of the indices. NAS is usually higher risk in terms of volatility than something like S&P. Anyways, long contracts increased substantially. Short contracts slightly increased. Very interesting to see the NASDAQ still remaining about 50-50 in terms of institutional long and short interest. The pound, for those of you guys who watch the pound, we had a big decrease in shorts. So interesting yet again to see decrease in both areas, possibly just some money coming out of this market, but a notable bigger decrease in shorts. Very interesting there. Let's keep going and take a look at more COT here. Euro, so euro declined in both areas. Still, though, a very heavy preference for the long side. So NZD had a really tough week, and you can see just decline in both areas. Let's take a look at this. This is the Dow. Dow had a bigger increase in shorts than longs, which is interesting. Still putting us at a very heavy short ratio by institutional traders. So something to think about there. Again, COT data, feel free to pause the video. If you guys don't have access to the EdgeFinder and you are interested, remember, do not miss the sale. It's all linked down below in the description. You can get access to the tools that I use every day, and it's a one-time thing. You don't have to pay us every month. It is literally get your access, be done with it, and use the tools whenever you want, and you get all the free updates that come out in the future. So, yeah. So COT was one thing. Let's also take a look at retail here. So retail positioning shows us, we're going to start with the major currency pairs. You've got GU, Euro Dollar, Dollar CAD, all these very short biased by retail traders. USD CHF, NZD, Aussie, very long biased by retail traders. And dollar yen, 50-50, about mixed. Take a look at the indices as well and the commodities. Let's take currencies out of the picture for a second. Gold, retail traders, 50-50. Indices, though, notably very short biased across the board. That is very, very curious. Again, you have a very heavy preference for the short side when it comes to retail traders. Good stuff there. Again, feel free to pause the video however you'd like. If you want to take a look at the minor currency pairs, I'm just going to put the minors up in case anybody has a specific pair they've missed. Feel free to pause the video and take a look at this. Yen pairs, very, very, actually, I guess, well, Swiss pairs, very long biased. The Swiss pairs, I would imagine, had a tough week in that case. Let's take a look at something like NZD CHF. Yeah, look at this. So this is prime real estate for retail traders trying to bet long. And when you hear that, right, it's not a surprise. I mean, I was able to tell you before even seeing what the chart looked like, retail traders tend to go long charts like this. They don't tend to sell these charts, they tend to buy them. It's very interesting and a very repeatable pattern that we've noticed. If you watch the channel for a long time, this is something that's not news to you. You probably knew it just as fast as I did. So yeah, guys, remember to hit the thumbs up button, subscribe, all that good stuff here on YouTube if you enjoyed today's market outlook. for the week ahead, please make sure to hit the notification bell. We'll be live Monday through Friday, and I would love to see some of you guys on the stream. Have a great day. We'll see you tomorrow.